What's going on, guys? We're going to take a look at the Nasdaq 100, which is the triple Q's ETF. So today down another percentage point. Realistically, very bad week. We know we had those CPI numbers come out. Everything pretty much got pulled back and slammed. But what I want to look at here is a very macro overview, and I want to look at the weekly time frame, and then I want to look at the daily time frame with you guys and kind of show you guys exactly what we are looking for and can expect going into next week. So if we start off looking at the weekly time frame, we did just put in a new low. This low takes out 2 prior weeks worth of price action. Now our next demand zone is going to be this 200 EMA, right? The exponential moving average. The 200 is resting right about $280. So one thing that I would be cautious of and looking at is if you guys are playing to the long side, or you guys are holding calls into next week, we could entirely get a bounce, but it doesn't mean that everything's just going to go back to the way it was. Okay, so if we get some sort of bounce, or maybe 1 or 2 days worth of a dead cat rally, I would take profits off of the table. Right now is not the time where you just want to be leaving a bunch of risk on and hoping that this just magically gets all the way back up to 318, 320, 330. You know, play it very smart. Understand that this is going to be your support level. If you would like to play this to the downside, here's what I would wait for. I would allow everything to bounce. Okay, I would sit on your hands, make sure everything goes as planned, let it bounce, let it consolidate, and the next time we come down through these lows, which as of right now is $285.40, I would take that short position and I would cover at 280. Now anything below 280 does have a macro flush point down to 271. If we take a look at the daily time frame, you're going to see why I think that it's potential we could bounce. So on this gap down, we did lose this whole channel level that we held here on the 6th of September and had this nice rally. We lost this, but now the bulls are now stepping in and reclaiming this channel area. So if we continue to hold this ground and we start to take out 289.63 next week, this is a bounce play that I would look to play into 290, 291, 292, 293, and I would want to clean up my profits here at this 5-day moving average sitting at around 295. All bets are off if we do lose today's lows. Those lows is going to be around $285.56. From there, we got $1 down to the lower Bollinger Band, but below the lower Bollinger Band, you can see it's a very open road ahead if we do start to confirm these lows here. So keep that in mind. If you would like to play the rejection and short, let this bounce, let it consolidate, let it roll through, and when we lose the 285, take the short. If you want to get long and chance a bounce here now, make sure you're either using the channel level, which is 287 as a stop, or a hard stop at 285.50. As long as we're over these two levels, you hold this, and take profits along the way. Make sure to clean up all your profits before we get into this 5-day moving average. Again, this is for traders. For long-term investors, you guys are looking at something a little bit differently. I would wait for some more consolidation or wait for at least a reclaim of the 5 or 10-day moving average. But your macro long is not until $333, which is a long ways to go. That's 50 points up to the upside, but that's, you know, where we got rejected recently. Before was a 200-day moving average in this top zone, and we got thrown all the way back down here. We would need to, you know, more than likely take out the 310 area with room from 310 to 316, 316 to 322. So again, I'm speaking to short-term traders. Short-term traders, your trade is below 285.60. Your long trade is over 289.63. Okay, those are the two areas you're looking for. Again, if you're going long, you're taking profits in this vicinity before the 5-day moving average. And if you're going short, you're taking profits at the Bollinger Band. And then once we start to clear that out. Hope this helps, and I'll catch you guys on the next one.